السلام عليكم ورحمة الله وبركاته.
Walaikum salam wa rahmatullahi wa barakatuh.
Walaikum salam wa rahmatullahi wa barakatuh. So we want to sincerely seek our indulgence to exercise little patience as to appreciate those of us that are here to time while we wait a few minutes for others to join. The next 2-3 minutes, maximum of 5 minutes, will commence the program. We're just trying to see how far we can actually have a turnout in the next couple of minutes. But inshallah, we'll commence the program in earnest. That makes it easy for us. Thank you very much. Assalamu alaikum.
وعليكم السلام ورحمة الله وبركاته.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم أشهد أن لا إله إلا الله وحده لا شريك له وأشهد أن محمدا عبده ورسوله. We thank Allah subhanahu wa ta'ala who has given us the grace to be here this morning. We are going to start the program in earnest as promised a few minutes ago. And our lecturer has been here earlier before 9. We want to sincerely appreciate him. And those of us that are joining late, thank you. We've tried, and we can see enjoying others to be part of the platform to learn from this this discussion because you agree with me that the discourse of this morning is apt, is timely, and without much ado, we'll start with the opening prayer. And to do the opening prayer for us is one of our brothers in the house, in person of engineer Habib Audu. So, Bismillah.
We give thanks and adoration to Almighty Allah subhanahu wa ta'ala, who in his infinite mercy made it possible for us to gather this morning to have this unique topic webinar. We are to Allah to direct the utterance of the lecture, and we pray that at the end of the day, what we intend to achieve with the webinar should be achieved. So understanding on the new tax law should be more equipped. And we pray that Allah should accept it as an act of ibadah for us. Al-Fatiha. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. Ar-Rahmanirrahim. Maliki Yawmiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdina siratal mustaqim. Siratal ladzina an'amta alayhim. غير المغضوب عليهم ولا الضالين. آمين.
Amin. Jazakumullah khairan. So we would take the next thing on the agenda, and that is to take to try to know those of a few individuals are going to undo one thing or the other, and some of the individuals that are at the background, and some of them, as they join the platform, would recognize and introduce them. So among those I'm going to recognize here today is one of our fathers in the house, is our mentor, our teacher, in person of Dr. Isa Adekunle Ahmad Mosaku. You are welcome, sir.
Assalamu alaikum wa rahmatullahi wa barakatuh. Jazakumullah khairan.
Wa alaikum
Everybody,
salam
you are
wa
also
rahmatullahi wa
welcome.
barakatuh.
Now,
Also, we are going to recognize along with him, he's also one of our mentors in the house, engineer Iklil Ahmed Aliu. You are welcome, sir.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. Also, we're going to recognize here this morning is one of our leaders, person of Mr. Abdul Hakim Kolawole Odeduton, ACA. You are welcome, sir.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. We also have a few individuals that will be part of it. As they join, I would recognize their presence and introduce them to the house. So let me recognize at this point the guest speaker of the day, in person of Mr. Mikhail Mustafa. You are welcome, sir.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. So, like I said, as others join the platform, we would get to recognize them. I would engage more, inshallah. So, without taking much of our time, we want to invite to the microphone the Malam that's going to take us through the recitation from the glorious Quran. And to do that for us is not that person than our brother, Ali Ustaz Ismail Adebayo.
أعوذ بالله من الشيطان الرجيم إن الله يأمركم أن تؤدوا الأمانات إلى أهلها وإذا حكمتم بين الناس أن تحكموا بالعدل إن الله نعم ما يعظكم به إن الله كان سميعا بصيرا يا أيها الذين آمنوا أطيعوا الله وأطيعوا الرسول وأولي الأمر منكم فإن تنازعتم في شيء فردوه إلى الله والرسول إن كنتم تؤمنون بالله واليوم الآخر ذلك خير وأحسن تأويلا. Indeed, Allah commands you to render trust to whom they are due, and when you judge between people, to judge with justice. Excellent is that which Allah instructs you. Indeed, Allah is ever hearing and seeing. O you who have believed, obey Allah and obey the messenger and those in authority among you. And if you disagree over anything, refer it to Allah and the messenger. If you should believe in Allah and the last day, that is the best way and best in results. Sadaqallahu Allah's word is indeed truthful. Assalamu alaikum wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. Jazakumullahu khairan. We want to sincerely appreciate our brother, our Ustaz, for that recitation. We pray that Allah rewards him abundantly and those of us that have listened into him. Amen. So at this point, we would take the opening remarks. And to do the opening remarks for us, one of our fathers in the house, one of our mentors, a silent achiever, and is another person than Engineer Ahmed Iqlil Aliu. You are welcome, sir. The opening remarks.
Assalamu alaikum wa rahmatullahi wa barakatuh. We thank Allah subhanahu wa ta'ala for giving us the grace to be here this morning. And I want to welcome us all to this particular wonderful session. Having thanked Allah subhanahu wa ta'ala for his grace, and as well, I want to give thanks to the organizers of this particular noble seminar, starting from the leadership, Ustaz Abdulhakim Odeduton, our elder scholars in the house, Ustaz Ahmad Mosaku, and a whole lot of our Ustaz that are here. Not forgetting our guest speaker for today, Mr. Mukail. I want to welcome all of us to this session. We find it very important that we should have this session to clear the dust and clear the air on the issue of taxation. That is why the topic that we have today, and with the kind of resource that we have that will be speaking to us today, should clear all doubts as regards the proposed taxation that we're expecting to commence from the 1st of January 2026. Being Muslims, I just want us to have, that mindset that what the government is proposing to us is not haram, even though we have the background that zakat is a charity tax in Islam, And this particular one that they want to talk about today, that we are proposing today, for the fact that we are under the umbrella of this nation called Nigeria, it is ethical for us as law-abiding citizens of this country that we should abide by the law and regulations of this country. Having said that, what the government is proposing to us, like I said, is not haram. And from the recitation of the Quran that our brother just, recited to us, Allah subhanahu wa ta'ala said that we should obey Allah, obey the Prophet, and obey the people in positions of authority. This falls within our injunction in Islam. It is a payment that is necessary, and it's a moral obligation for societal function. What they are calling us for is not, something that we can say we should turn our back to. It is going to benefit the populace. It is a moral call. It will deprive us not to be in the category of those that evade tax. The essence of this taxation, as we know, is to build infrastructure, build the defense system, build the social services and all that. So my dear brothers, and from the feelers that we have got and sisters, we know that this call is more beneficial to those at the lower cadre of the society. In fact, some of us that are in paid employment and the rest of them, by the time you do the calculation of this new taxation, you find out that some of us, the tax that we have been paying is even going to reduce if you do it well. And for those that have been evading tax and the rest of them, this is an opportunity for more people to come into the tax net. But for us as a group, we want to be sensitized. We don't want to follow, the noises around, on social media and the rest of them. Let's hear it directly from the horse's mouth. And that is why we have brought, our scholar, Brother Mikhail Mustafa, to come and discuss with us. I just want to enjoin us to listen well to him, listen to the breakdown of what it entails in this particular, tax reform. And I pray Allah subhanahu wa ta'ala will guide his thoughts, or guide his tongue as well, will give us the good hearing, so that we can benefit from all what he's going to discuss with us. And I thank the leadership once again. I want to enjoin the organizers to please record this session so that we can share it along with people that are not on the call today. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. Thank our father for the opening remarks. So the next thing we are going to have is to have the lecture. So our lecturer today, Mr. Mikhail Mustafa, is the guy of accounting from Ekiti State University. He's a chartered accountant, ACA. He's chartered tax administrator, ACT High. He is an international tax expert and taxation service expert. He has been privileged to have worked with some of the big four companies we have. Notable among them is EY, and presently he works with KPMG Nigeria as the manager tax, regulatory, and people services. So at this juncture, we have the honor of having to the mic Mr. Mukail Mustafa. You're welcome, sir.
Yeah, thank you. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa
Okay,
barakatuh.
yeah. Okay. Thank you for that wonderful introduction. And I want to say a big thank you to Engineer Iqlil Ahmed for that wonderful opening remarks. I mean, the opening remarks actually captures it all. The thing about our discussion today, I mean, I need to make some maybe a caveat or disclaimer is about the fact that this my presentation, the slide we just provide a guide is not going to be everything I'm going to say here, because as we discuss along, some other things will come up. So please indulge me if you're not seeing what I'm saying on the presentation. Yeah, thank you. So by way of introduction, Otumba has already introduced me, so I just need to introduce myself properly. I mean, as I was trained. My name is Mikail Mustafa, though they call me, my official name is Mokaila Mustafa. I'm currently a manager in People's Regulatory and I mean Tax Regulatory and People Service, KPMG, ANR service unit specifically. I've been doing tax consulting for a while now. I'm not a tax administrator. So I've been doing tax consulting for a while for companies, for individuals and business and the like. And I'm sure the reason why we are all here today is to talk about the Nigerian Tax Reform Act. And I mean, after so much debate in the media space, in the National Assembly, the Nigerian president signed 4 acts into laws. 4 acts into laws. And the 4 acts are Nigerian Tax Act, which talks about what are the income liable to tax. How are you going to calculate your tax? What are the expenses, if any, you can deduct from your income before you calculate your tax? What are the allowances granted to you by the law? What are the income that you may not tax in the law? So Nigerian Tax Act is that book document you are going to look for when you want to talk about how you are going to compute your tax. And interestingly, it's not like we don't have tax laws in Nigeria. And I think Engineer Iqlil alluded to the fact that we have tax laws in Nigeria currently, but the level of compliance is just very low. Unfortunately, it's very low. Now, what we have here is that all the tax laws that we currently have in Nigeria are being consolidated into this one document. So you don't have to go visit, check several documents before you know what your tax will be. You can just look at this document and you'll be able to get what your taxes are. Then the second one is Nigerian Revenue Service Establishment Act. This one is more or less like an administration act. I mean, an act that creates Nigerian Revenue Service. Currently, we have a Federal Inland Revenue Service that administers federal government taxes. But now we are going to have Nigerian Revenue Service, which will be in charge of collection of revenue for the entire federation. So it's not just going to be taxes they are going to be collecting. They are also going to be collecting custom duties and other levies and charged by the federation, not by the state. Then the third one is Nigerian Tax Administration Act. Nigerian Tax Administration Act is like a sister, or let me say a brother to Nigerian Tax Act. You know, in law, if we have a law and there is no deadline, there is no penalty, there is no compliance requirement, then that law is just going to be voluntary. I mean, people will choose whether to comply with the law or not. But when you have a law and you have the compliance requirements, you have the deadline for complying, you also have penalty for not complying. That is what we call law. So it is this Nigerian Tax Administration Act that speaks to your compliance obligation as an individual. If you fail to comply, what are the penalties, and what are the things you need to do as an individual, as a business owner, and the likes. Then we have the Joint Revenue Board Establishment Act. This act is generally for dispute resolution between tax authorities. I mean, state tax authority and another state tax authority, or Federal Inland Revenue. I mean, Nigerian Revenue Service and state tax authority, and also to resolve dispute between taxpayers and the tax authorities. So that's more or less what Joint Revenue Board is. Now, this act, two of them have already become effective from the day the president signed them into law. That is 26 June 2025. Nigeria Revenue Service Establishment Act, the Joint Revenue Board Establishment Act, these two laws have already become effective. So we are not waiting till next year before these two laws becomes effective. They are already effective. While the Nigerian Tax Act and the Nigerian Tax Administration Act, they are going to be effective 1st of January 2026. I think less than 10 days, 10 days time. So, and I'm very happy, I'm very delighted to be on this call to explain to you how this is going to impact you as an individual, as a business owner. Because it's not like we do not have law in Nigeria. We have tax laws. And I said it's just the compliance, I mean, the level of compliance has been very low. And this is due to the fact that maybe the tax authority do not have the capacity to administer these taxes on every individual in Nigeria. But now, I think what they are going to be doing going forward is to use technology to administer tax, to collect tax from individuals. Now, there are questions that have been, that people have asked me, maybe family members, friends, and the likes, about, will the tax authority be deducting their money from bank accounts? Would they be required to go and queue and register for tax? And questions about, oh, okay, the government are collecting money. What are they using the money for? The government wants to collect tax. Were they the one that set up my business for me? Were they the one? All of these questions are few of the questions that the presentation we address today. Okay, and you may want to ask yourself, what are the government objectives for enacting this Nigerian Tax Reform Act? What are the objectives? The first objective is to simplify the tax laws. I bet with you, when you look at the current tax laws that we have, the languages in the tax laws, they are more or less like you may need an expert to help you to interpret the law before you understand it. I mean, you will need to pay for tax consultant or a lawyer before they can assist. I mean, before you can understand it. One of the laws, let me cite an example. One of the laws is Stamp Duty Act. Stamp Duty Act was enacted before Nigerian independence, and the language in that Stamp Duty Act, even me as a tax consultant, I struggle with them a lot because it was enacted by the colonial masters. The government have tried as much as possible. The government have tried as much as possible to amend these laws, but the laws, when you made the law before I was born, more than 50 years or 60 years ago, the compliance requirement there, the penalty for non-compliance, even if you fail to comply, with many of these, if you fail to comply with many of these laws, the penalty, they are very insignificant. So it encourages non-compliance. So there is a need to simplify our tax law. The second one is efficiency of tax compliance and administration. So what the government wants to do now is to consolidate all the tax laws, the administration, so that we don't just have duplication of effort everywhere. We don't have FRS collecting collecting taxes, Nigerian Customs Service collecting custom duties, the other agency or government collecting royalty. We have several things like that. So the government wants to make sure that there's efficiency in tax compliance and administration in Nigeria going forward. Then we want to align with global best practice. I mean, it is something that, something that we need to watch out for is, it is not only Nigeria that government collect taxes. It is not. Everywhere in the world, government collect taxes. Yes, we know we have some countries that are known as tax haven, but those tax haven, they get their money from other sources. But in Nigeria and many countries, it is through taxes that they develop their nation. And what we want to do in Nigeria is to align with global best practice in collecting tax. We don't want to be setting up roadblocks. We don't want to just be coming. You don't want the local government authority.
Hello, sir.
Yes, sir.
Sorry to interject. We would appreciate that you could mix, because we have lots of traders and artisans on the call. So, cool easy,
okay.
For that
Okay.
We have lots of them on the call.
I will do that. I will try as much as possible to do that. So, okay.
Thank you very much.
Thank you. You're welcome. Okay. Then also, okay, let me try to come back to Yoruba now. So, ara nǹkan tí ìjọba fẹ́ ṣe òun ni pé wọ́n fẹ́ try láti generate more revenue and to ensure that this revenue are sustainable for national development. And one of the questions tí àwọn èèyàn máa ń béèrè òun ni pé gbogbo owó tíjọba ń gbà yìí kí ni wọ́n fẹ́ fi ṣe? Gbogbo nǹkan gbogbo ilé ìtàn ti gbà sẹ́yìn kí ni wọ́n fi ṣe? To be honest, when it comes to taxation, tax is something tó yẹ pé ìjọba, tẹ́ gbọ́dọ̀ san is compulsory for every person in Nigeria to pay tax without even expecting any value in return. That is what we have in our tax policy in Nigeria. That is something, is money you pay without expecting value. Of course, the government also have the duty to use that money judiciously for the intended purpose, for developing the country, for paying salaries, for paying for infrastructures and the likes. Then the last one is to, of course, harmonize all the tax laws we have in Nigeria. Currently in Nigeria, we have, I can't mention, but we have more than 20 tax laws in Nigeria for companies. You may not be aware as an individual that, because the only tax enacted by National Assembly that impacts you is probably the personal income tax and the value-added tax. Many other tax laws do not impact you, but we have many in the country. So what we want to do, what the government wants to do is to harmonize all these tax laws. Sorry, I'm trying to, okay. Now, these are the, before a law can come and replace the other, gbogbo àwọn ilé ìta ní tẹ́lẹ̀ wọ́n gbọ́dọ̀ strike it out. So, law tuntun la fẹ́ ní from next year. Àwọn ilé tó wà tẹ́lẹ̀ ìjọba ní láti rule wọn, strike them. So these are the àwọn nǹkan tó wà ní ojú àwòrán wa yìí are the laws that we currently have, that from next year, from 1st of January, they will cease to exist. Mi ò ní dá wa láàmú láti máa ka gbogbo àwọn eléyìí, because they do not, they will not have any significance for you. But eléyìí tó kàn yín as an individual or business owner is this Personal Income Tax Act, Personal Income Tax Act. So now it's not that we are not going to have all of this again. It's just that they have been consolidated into one law. Now, let's now go to the tax law itself. I'm aware that we have heard several things in the media, about, what your compliance obligation will be from next year. Kí ni àwọn kan tí ẹ máa ní láti ṣe from next year? Láti next year, 2026, ìjọba wa yìí ò tiẹ̀ fẹ́ràn wa, wọ́n tún ti fẹ́ máa gba owó orí lọ́wọ́ wa. let me break it to you that even currently, you are meant to be paying tax. All the money coming to you as a business owner is not for you alone. Not the 100%. All the 100% is not for you alone. The amount for the government, you have not been paying to the government. You have been evading tax. That's the meaning. People in employment will tell you that before their employer pays them their money, their salary, the employer will deduct tax from their salary and pay it to the government. Nǹkan tí mò ń sọ ni wípé fún àwa tá a jẹ́ artisan wípé àwọn tó wà ní tó ń ṣiṣẹ́ pẹ̀lú aládàáni tó ń báyàn ṣiṣẹ́ kó tó di pé àwọn tó gbà wọ́n síṣẹ́ kó tó di pé wọ́n fún wọn ní sálárì ní ìparí oṣù, wọ́n máa deduct tax láti inú sálárì wọn, wọ́n á dẹ̀ san fún ìjọba. Àwọn tó wà ní ìdíṣẹ́ aládàáni yẹn. But àwọn tó jẹ́ ọjà láńtà ta ní ṣọ́ọ̀bù ibì kan, ó yẹ ká máa san owó orí náà. But torí wípé kò sẹ́ni tó sọ fún wa tẹ́lẹ̀ pé ká máa san owó orí, mọ̀ nípa òfin tó wà nílẹ̀ tẹ́lẹ̀, òun ló jẹ́ kí ó dàbí pé nǹkan tá à ń sọ yìí tuntun ni. Gbogbo ẹ̀ ò kì í ṣe tuntun. So now the law has now come again and said, okay, àwọn income wo ni ó yẹ kẹ́ máa san. Àwọn income wo ló yẹ kẹ́ máa san owó orí lé lórí? Number one, òun ni àwọn employment income. Employment income ni àwọn tó ń ṣiṣẹ́ aládàáni, tó ń bá àwọn èèyàn ṣiṣẹ́ tó ń ṣiṣẹ́ aládàáni, bí mo gba Yorùbá yẹn, ẹ má bínú. Employment income. Àmọ́dẹ̀ sọ wípé àwọn employment income yìí kó tó di pé wọ́n fún yín sálárì yìí náà tẹ̀ tí máa yọ. So nǹkan tẹ́ máa gbà ní sálárì yìí òun ni owó tó yẹ pé wọ́n ti yọ tax lé lórí, ẹ̀ ní láti san tax mi lórí ìyẹn mọ́. Àwọn tó gbà yín síṣẹ́ wọ́n ti yọ tax lé lórí. Then second type of income tẹ́ máa san tax lé lórí òun ni owó tẹ́ jèrè nídìí okòwò yín. Bóyá professional nìyí o, bóyá artisan nìyí ni o, bóyá ẹ̀ ń ṣe káràkátà ni o. Èrè tẹ́ bá jẹ lórí káràkátà yẹn ó yẹ kẹ́ ẹ san tax lé lórí. Then tó bá yẹ pé ẹ ta nínú àwọn nǹkan ní kì í ṣe business nísìn, bóyá ọ̀dà owó dá yín àbí ẹ fẹ́ ra nǹkan kan, ẹ wá ta nǹkan kó tó di pé ẹ ra nǹkan. Ẹ ta nǹkan ní bíi ẹ ta ilé, ẹ ta mọ́tò, ẹ ta anything tó bá ṣàtà, ó yẹ kẹ́ ẹ san owó orí lé lórí. Tó bá yẹ pé ẹ ní owó tó pọ̀, ẹ wá tún wá invest nínú business ẹlòmíì, bóyá ẹ invest ní bóyá ẹ invest bí ẹ ṣe bí Dangote nsìn, ẹ invest nínú shares Dangote wọ́n á fún yín ní dividend. Àbí ẹ yáyàn lówó, ẹnìyẹn fún yín ní interest, auzubillahi, a kì í charge interest nínú Islam, but ẹnìyẹn wá fún yín ní interest. Àbí ẹ kọ́lé, ẹ wá fi rẹ́ǹtì síta, àbí ẹ kọ́ ṣọ́ọ̀bù, ẹ fi rẹ́ǹtì tẹ́ ń gbà yẹn, gbogbo ẹ̀ ló yẹ kẹ́ ẹ san tax lé lórí. Àbí any other form of income or profit tẹ́ ẹ bá ní, bá gbogbo àwọn nǹkan tá a ti sọ bí it's not covered, but it's coming from profit from trade and business, then you have to pay tax on it. So pé mo wá sọ wípé òfin wá sọ pé ẹ san tax lórí àwọn income yìí kò mean wípé bó bá ṣe ń wọlé níjọba ṣe máa yọ tax lé lórí. There are still ways to calculate. There are still other things you will consider before you get to your final, for your final tax position. Now, ó wá ṣe wípé ẹ ń gba owó wọlé, owó ń wọnú account yẹn, àbí ẹ tẹ̀ ń gbà in cash, but ẹ keep record. Báwo ni ìjọba ṣe máa mọ̀ wípé oye tax wo ló yẹ kẹ́ san? Màá sọ fún yín pé the best thing for you is, as you are making your money, as you are doing your business, be keeping records. Mo dẹ̀ mọ̀ pé àwọn ìyá wa àtàwọn ẹ̀yin bàbá wa ẹ mọ bó ṣe máa ń keep record dáadáa torí ara nǹkan tí mo kọ́ látọ̀dọ̀ bàbá mi ni pé in fact kò sí bí pépà yẹn kó má ṣe wúlò tó wọ́n á sì keep ẹ̀ síbi kan torí wọ́n believe pé ọjọ́ kan ó sì máa wúlò, so it is always better kẹ́ keep record. Ṣùgbọ́n tẹ́ ẹ bá keep record ẹ máa fún ìjọba láǹfààní láti kọ̀wò yín látòkè dé sálẹ̀ báyìí pé bí mo ṣe ń wò yín ó yẹ kẹ́ ẹ lè san tax 20 million. I'm just joking. Wọ́n á dẹ̀ access yín sí tax, ìyẹn wọ́n ń pè ní presumptive taxation. So tẹ́ ẹ bá fẹ́ kí wọ́n access yín sí irú nǹkan báyẹn, best thing for you is to what? Is to keep record. We'll talk about it more inshallah. Now, a ti sọ̀rọ̀ nípa àwọn income tí ó wà liable to tax. Then what are the income that are exempt from tax? I mean, kí ni àwọn èrè wo lẹ lè ní tó yẹ pé ìjọba ò ní wò yín, wọn tiẹ̀ ní béèrè owó orí lọ́wọ́ yín? Number one ni pé especially fún àwọn tó wà ní in employment currently, ni wípé tí ẹni tó gbà síṣẹ́, your employer, if they want to, maybe they sack people generally, they are doing restructuring or they feel like, oh, we have too many staff in this company and we want to let go some staff, and they now compensate the staff they are letting go. The compensation for loss of office up to 50 million naira is not liable to tax. The excess on 50 million is liable to tax. Kí là ń sọ ni pé tọ́n bá san owó fún yín pé ṣé owó gbà má bínú ni kí n pè, owó gbà má bínú lọ gbélé ẹ̀ tí ó wá ju 50 million lọ. The 50 million yẹn is not liable to tax. So ìjọba ò ní sọ pé kẹ́ wá san tax lórí. But tó wá pé ó ju 50 million lọ, oye tó fi ju 50 million yẹn is ẹ máa san tax lórí. Or tó wá pé èèyàn kan sùn yín sí court, àbí ẹ sùn èèyàn kan sí court, èèyàn yẹn wá pé bóyá èèyàn yẹn ṣe nǹkan tí ò dáa fún yín, ó bá yín lórúkọ jẹ́, ẹ ṣàṣe wọn, ó bá yín lórúkọ jẹ́, ẹni yẹn wá fún yín ní owó up to 50 million. That 50 million, you are not to pay tax on it. That is not liable to tax up to 50 million. But tó wáyé pé ó ju 50 million lọ, oye tó fi ju 50 million yẹn, ẹ máa san tax lé lórí yẹn. Then the second, I hope my voice is clear. I hope my Yoruba too is clear. Please confirm. Okay.
Yes, we are getting you.
All right.
There's a concern around that some people here also don't understand Yoruba. So maybe could mix.
Wow. Okay. What do we do now? Okay, I will try. I'll be code missing. I mean, I will not. Okay. Now,
well, sorry. Can I suggest that
All
you
right.
should just, if you can just, you have the slides. Those that cannot hear your Yoruba, they can read the slides. They can read. Just give us in English summary of the focus of that particular item. Then in Yoruba, you cannot enlighten those that.
All right. Thank you.
Hello. So, please, sorry. This meeting have circulated all over Nigeria.
Wow.
From me, it's better than if there are some that they can as well. But it has circulated all over. I'm listening from Niger State, so please let's maintain the distance. Sorry.
In fact, I've received several messages on my phone.
Mr. Mustafa, so what we suggest you do is maybe you should just try as much as possible to summarize of those slides as you move on, just a little Yoruba to capture all of those things. So we'll go back and forth. We will not be able to actually enjoy it like we would have loved to, but I think it's better for everybody to actually have a fair share of the communication. We have had a lot of messages, but let's at least for the benefit of everybody. Thank you very much, sir.
All right, thank you. Apologies for the non-Yoruba speaker. Apologies. I've forgotten that I'm not only speaking to people in Lagos. So, okay, like you suggested, I will say I'll speak in English. Then maybe after I'm done, then I will just summarize in Yoruba. So just let me start again over the income or gain exempt from tax. So in the previous slide, we've mentioned that all the income you earn as a business person, as an individual, they are liable to tax. But it is not automatic. What the law usually does is to bring all the income into the tax net. And after bringing all the income into the tax net, it will now start exempting certain income due to certain things the government wants to achieve. I mean, if you know, tax is one of the ways government used to impact the fiscal policy. So one thing here you have is if there is a compensation for loss of office or damages paid. I mean, if your employer is doing restructuring and they want to let go certain staff, and they pay each staff 50 million or less than 50 million, such amount of money will not be liable to tax. Any excess above it is liable to tax. It used to be 10 million before. I think I need to make that clarification. It used to be 10 million before, but the government felt like 10 million is very small. And of course, this law is pro low income earners. They want to ensure that the low income earners are covered, the low income earners are not excessively taxed, and that's why this threshold has been increased from 10 million to 50 million. The next one is if you're disposing shares in Nigerian company and the sales proceed is not more than 150 million, and the gain on the disposal is not also more than 10 million, such income is not liable to tax. So for the benefit of people who cannot speak, I mean, who do not understand English, what I'm saying here, ni wípé tí ẹ bá invest ní company, ẹ wá ta investment in a company kan and ní Nigerian company ni o, and owó tẹ́ gbà níbẹ̀, owó tẹ́ fi ta kò ju 150 million naira lọ, and the èrè tó wà lórí ẹ̀ kò ju 10 million naira lọ. Such income yẹn ìjọba ò ní gba owó orí lé lórí. Then going forward, if you dispose the house in which you are living, your dwelling house, together with the adjoining land up to 1 acre, is not liable to tax. For the purpose of people who do not understand English, nǹkan tí mo sọ bí ni pé tẹ́ bá ta ilé tẹ́ ń gbé àti àwọn ilẹ̀ tó surround ilé yẹn tí up to 1 acre, mi ò ẹjọ́ ẹ má bínú, mi ò mọ Yorùbá acre, ẹ má bínú, ọmọ Yorùbá gidi ni mi ò mọ túmọ̀ acre. I'm sure you will forgive me. Up to 1 acre, such owó yẹn is not liable to tax. Then, if you sell your personal tangible property and the sales value of that tangible property is not more than 5 million or 3 times the annual national wage, whichever one is higher, is not liable to tax. What are we saying here is that, let's say you have you dispose your TV, you dispose your fridge, you dispose your clothes, you dispose your shares that you are using, your personal tangible property, and the value you get from this is not more than 5 million, then you don't have to pay tax. I mean, you are not required to pay tax on such. Nǹkan tá à ń sọ bí fún àwọn tí yóò gbọ́ òyìnbó ní pé tẹ́ bá ta nǹkan ní tí ò ju 5 million naira lọ, or tí ò kọjá dédé minimum wage ní Nàìjíríà, annual minimum wage ní Nàìjíríà, eléyìí tó bá ti tóbi jù nú, tó bá ti pọ̀ jù nú méjèèjì, ẹ ní san tax lórí. That is that. So ẹ máa rí wípé kì í ṣe gbogbo owó tẹ́ bá earn ni ó wà liable to tax. What I'm saying here is not all the money that you earn that are liable to tax. It is when certain thresholds are exceeded. That is when it will be taxed. Then if you sell your private car up to 2 cars in a year, they are not, the income you derive from such is not liable to tax. The private car, private vehicle, don't forget, emphasis on private. If you are a dealer, that's not private vehicle. If it's a commercial vehicle that you sold, that's not private vehicle. Private vehicle means what you use to commit yourself and your family. You are not using it for commercial purpose, and you are not even a car dealer. So up to 2 cars, it's not liable to tax per individual up to 2 cars. What nǹkan tí mò ń sọ bí ni pé tẹ́ bá ta mọ́tò yín, mọ́tò tẹ́ ń lò fún ara yín, tẹ́ fi ń gbé ẹ̀yin àti fámìlì yín jáde lọ, tẹ́ tí ṣe pé bóyá mọ́tò tẹ́ fi ń ṣe kabúkabú àbí mọ́tò tẹ́ fi ń kó èrò àbí tẹ́ fi ń kó ẹrù, tẹ́ bá taru mọ́tò bẹ́ẹ̀ ẹ ní láti sanwó orí. Then tẹ́ bá ta anything, when you sell any asset that you receive by way of gift, you are not required to pay tax on it, except inheritance. Inheritance, if you sell your inheritance, you are going to pay tax on it. But if somebody gives you money, gives you a vehicle, you receive it, you didn't pay anything, just receive it by way of gift. When you sell such an asset, then it's not liable to tax. Then when you receive passive income means what is it called? Dividends, interest, royalties, rent. You receive it from abroad through government approved channels. You are not required to pay tax on it. Come on, ni pé tọ́n bá san rent fún yín, tọ́n bá san dividend fún yín, tí company tó wà ní òkè òkun tó bá san rent fún yín, tó san dividend fún yín, àbí kí là ń pè royalties, you are not required to pay, and it was brought through government approved, you are not required to pay tax on it. Pension, gratuity, or any other retirement benefit is not liable to tax. So what we are saying here is pension, gratuity, and retirement benefits are not liable to tax in Nigeria. Then income from bonds issued by state or federal government. Income, whether you dispose your bond in your or whether you earn interest or any form of income on that bond issued by federal government or state government, you are not required to pay tax. You are not liable to tax on that. We have other exempt income, but we cannot mention all. I just thought to mention this few to allay your fears that not all your income from next year will be liable to tax. So you have to, one thing I will tell you from here onward is to just calm down. Nobody is coming to haunt you. Nobody is coming to deduct your money from your account. Continue to do your business the way you were doing it. It's just that what will likely change, what may likely change from next year is that compliance requirements will be heightened. You'll be required to do certain things. We'll talk about those certain things before we finish this slide. Okay. Now, who are required to pay tax in Nigeria? And who are you required to pay this tax to? Now, in Nigeria, it is not about whether you are a citizen of Nigeria or not. It is about whether you are a resident in Nigeria. What are we saying here is that to pay tax in Nigeria, citizenship is not one of the requirements. To pay tax in Nigeria, the requirement is you are deemed to be resident in Nigeria. If you are also not resident in Nigeria, you may be required to pay tax. But let's talk about who is resident in Nigeria. Now, if you are deemed to be resident in Nigeria, that is, you are domiciled in Nigeria. For the purpose of people, for the benefit of people who don't understand that, in ìdí tẹ́ máa fi san tax in Nigeria kì í ṣe pé torí pé ọmọ Nigeria ni, but torí wípé Nigeria lẹ ń gbé. That's the bottom line. Nigeria lẹ ń gbé. Now, how are we going to know that? We are going to know if you're a resident, if you're domiciled in Nigeria. One, if you have a permanent place available for your domestic use, you don't even need to be living there, but you have a permanent place available for your domestic use in Nigeria, and you don't need to be the owner of that house. In as much as that place is available for your domestic use, you are deemed to be a resident in Nigeria. And this is what may likely bring people living in diaspora into Nigerian tax nets, because a lot of people, even though they have left the country, they still maintain some certain permanent place for their domestic use in Nigeria. Then the third one is if you stay in Nigeria for up to 183 days in a 12-month period, you are 183 days is equivalent to 6 months. So if you stay in, you are deemed to be resident in Nigeria. If you're a diplomat, even though you are not living in Nigeria, but you are a Nigerian diplomat, you are deemed to be resident in Nigeria. And if you have an habitual place of abode in Nigeria, you are deemed to be a resident of Nigeria. Or if you have significant economic or immediate family ties in Nigeria, you are deemed to be a resident of Nigeria. Now, what's the implication of being a resident in Nigeria? It means if you are deemed to be a resident in Nigeria, all the money you earn, wherever you earn them, is liable to tax in Nigeria. So if you are deemed to be resident in Nigeria and you earn money from abroad, is liable to tax in Nigeria, except those income that are exempt. What we are saying here is, tí ẹ bá ń gbé Nigeria, tí òfin bá sọ pé ìlú Nigeria lẹ ń gbé o, ìlú Nigeria lẹ ń gbé based on the conditions tó fi kalẹ̀, gbogbo income yìí ibikíbi tẹ́ ẹ bá ti máa make income yẹn will be liable to tax in Nigeria. Tó yẹ pé ẹgbẹ́ ní you are living in Mowe, or you are living in Kaduna, or you are living in Abuja, you are living in Lagos, but your income, your source of income is from UK. Your source of income is from UAE, or is from Saudi Arabia, or is from Qatar. Anywhere, since you are resident in Nigeria, that income is liable to tax in Nigeria, except where such income is exempt from tax in Nigeria. And you have mentioned that. Okay. Before I go here, now, what are the compliance requirements when it comes to taxation in Nigeria? First is you are required to register for tax in Nigeria and obtain tax ID. That is the requirement. As an individual, as a business owner, you are required to register for tax in Nigeria. Now, the government has come out to say that you will not need to queue up for registration. The fact that you already have maybe NIN or BVN or CAC registration number, your tax ID will be generated for you. And tell me, who does not have, how many people do not have NIN or BVN or CAC registration? You one way or the other, you have one of these identity. So you will not need, in fact, as I'm talking to you, if you go to DATB website, if you type your BVN, it's most likely that you are going to see your TIN there. So you don't need to go and do a separate registration. Your TIN is just there. You just need to be aware of the existence of your TIN. So the requirement has already been fulfilled for you by the government. So that one is there. Then the second obligation that you have is that you are required to file tax returns. For people in employment, they already know this. They are already aware of this because this is what they do every day. Your employer will file returns for you 31st of January, not later than 31st of January of every year. This will be done 31st of January 2026 for this year. Then you, as an employee, on 31st of March of the following year, you have to file your returns. So, and that is where you will now declare all your income, whether it's only employment income you make, or you make all the income that I mentioned earlier. You declare all the income. Then if you earn more than employment income, you're also going to declare your expenses, deduct your expenses from your income, then get your taxable profit. Then after that, you now apply your tax rate on that. For the benefit of people who don't understand English, what I'm saying here is that àwọn kan wo ló ní ìjọba ní kẹ́ ṣe ní òfin ní kẹ́ máa ṣe from next year. Of course, already requirement yẹn wà already. So first, ẹ máa ní láti register. Ìjọba ti sọ pé ẹ ní láti lọ queue up. They've generated TIN for you. They will generate TIN for you. If that has not been done already, they will generate it for you. So you don't need to go and queue up. In fact, if you go to JTB site, ẹ máa rí tẹ́ lo BVN yín àbí kẹ́ lo NIN yín, ẹ máa rí tax ID yín. So you don't, that one has already been free for you. The second part is ẹ máa ní láti submit income yín, à ń pè ní self-assessment. File it with the government. If you're a business owner, that will be not later than 31st of March of every year. You file it with the state government, not the federal government. You file it with state government, and you will declare, you are going to declare all your income from A to Z, all your income. Then you're also going to declare your expense, your business expense, not your personal expense, your business expense. Then after that, you get your profit, then you apply your tax. Now, NTA has now come to make certain amendments when it comes to determination of your income. Now, one of them is what we call benefit in kind. You will agree with me that your employer can pay you in cash or in kind. If they pay you in cash, that's your normal salary that you normally receive in your bank account. But when they pay you in kind, could mean that, oh, instead of giving you money, they buy you a car for you to be using. Or instead of giving you money, they rent an apartment for you and you can bring your family to that apartment. Instead of giving you a car, instead of giving you cash, they buy you generator and all of that. Those are things that we call benefits in kind. Now, currently, if you earn benefits in kind, if that benefits in kind is just an asset, maybe a car or generator, the government will calculate 5% of that benefit, of the value of that benefit, and they will add it to your income as an employee, and it will be taxed 5%. If that asset is an accommodation, maybe they provide, your employer provided an accommodation for you in a particular year, the entire annual value, the rental value of that property will be added to your income and it will be taxed in your hand. But now what the NTA has done, the Nigerian Tax Reform Act, is that such benefit in kind for accommodation should be restricted, should be limited to 20% of your annual gross pay. Instead of adding the entire money, the entire annual rental value into your annual gross salary, it should be limited to 20%. I will not need to go over, I won't go over this in Yoruba because this should apply to people in employment. And for me, this is a wonderful introduction into our law because let's say you are living, people in Lagos can relate very well. Let's say your income, annual gross salary is 10 million naira, but your employer rented an apartment for you in Ikoyi and they are paying annual rent of, let's say, 20 million. It means that 20 million will be added to your 10 million. It means your annual gross salary will be 30 million. 20 million you didn't receive in cash will be added to you, and you have to pay tax on the 30 million and not your 10 million you received. So that is what we use, what we currently have. But going forward, it will just be restricted to 20% of that 10 million. 20% of 10 million is, that should be 2 million. So 2 million will be added to that 10 million instead of 20 million being added to 10 million. Then consolidated relief allowance has not been retained. Unfortunately, we do not have consolidated relief allowance. And you know that consolidated relief allowance is the biggest allowance, it's the biggest allowance or the biggest relief that we get when it comes to personal income tax. What we now will have will be a rent relief that will not exceed 500,000 in a year. 500,000 rent relief, and it is will only be available to people who are paying rent. So if you are a landlord, this relief will not, unfortunately, this relief will not be available to you because at that point, you are not paying rent to anybody. You are the owner of the house you are living. So no relief. Now, what that means is that there is no consolidated relief allowance. And if you are not paying rent, there's no rent relief allowance for you. And this rent relief allowance is not significant. It's not something you should even bother yourself. I mean, I'm not saying you should, it's your benefit. You can take it, but if you are not able to take it, the impact is very minimal on your tax. Then, of course, you can deduct pension from your income. You can deduct health insurance from your income, even if you are paying interest on on loans you borrowed for developing your house, the house you are living in. You can claim deduction on that interest. If you pay life assurance premium on your life and that of your spouse, then you can claim deduction on it. The NTA still retains all these deductions. Now, the elephant in the room is the revised tax bound. Now, we now have a revised tax bound. Currently, what we have is that the tax rate starts from 7% up to 24%. And the way the tax rate is calculated is graduated. However, in the NTA, we have a new tax rate from 0% to 25%. The way it will also be calculated is also what? Graduated, the same way. So the NTA is saying that after making your income, you have calculated your income. You have deducted your expenses and the allowances granted to you by the law. Whatever you have is known as taxable income. Now, taxable income is what you are going to subject to tax. Now, that taxable income or taxable profit, the first 800 of that taxable profit is not liable to tax. Is taxed at 0%. The first 800 is taxed at 0%. The next one, the next 2.2 million is taxed at 15%. Then next 9 million is taxed at 18%. Next 13 million, so up to when we get to 50 million per annum, not per month. Now, the question I will ask you is that in Nigeria currently, how many people make 50 million, above 50 million taxable profits in a year? There are not many. But my question is, the question I will also ask you is, how many people makes less than 800 million in a year? We have many people. How many people makes less than 3 million in a year? I know of a lot of people, especially fresh graduates. We have a lot of them in that category, that their income is not up to this, even the third band. So what would that do to us? So we have done a simulation for your taxes. We can't do all the simulations, but we did for certain income brackets. So under the current tax regime, if your total income is 10 million naira per annum, what you will be paying for tax will be 1.5 million naira in a year. In a particular year, maybe from employment or from business, the is not more than 10 million. Assuming all the assumptions here are correct, it's not more than 10 million in a year. Your total tax will be 1.5 million. But under the NTA, that is from next year, that same amount, the tax you are going to pay on it will be 1.3 million. That is, in your don't earn 10 million, the person earning 10 million will pay less tax from next year than what they are currently paying now. And the difference is about 2 million. 200,000, not 2 million, 200,000 in a year. So if your salary or your income is not more than 10 million, you shouldn't have anything to worry about, except the fact that you have been evading tax for a long time. Now, these are other simulations. So if somebody is earning 50 million in a year, under the current tax law, under the Personal Income Tax Act, the person will be paying 2.4 million. But from next year, the person will be paying 2.2 million, a difference of 166,000. If somebody is earning 25 million in a year, the difference will not be much. It will be earning, it will be paying as tax 4.1 million. Under the current law, he is paying as tax 4.1 million under the current law, but under the NTA, he's paying 4.206 million, a difference of 7,000 naira. You can see that it's not significant. So it means somewhere around 25 million is the equilibrium. That is, if you're earning 25 million in a year, it means you will not be better off or worse off under the tax law. But if you are earning more than that, then you will now start feeling the impact. At that point, you are now deemed to be maybe high income earners, or high income earners or high net worth individuals, up to 150 million, 200 million, and that. And let's be honest to ourselves. In Nigeria, if you take the sample, or if you look at the population, how many people in Nigeria earns above 25 million in this country? Even if you are doing business, for business, don't forget that what you are going to be taxing for business purpose is not the income, is your profit from business that you are going to tax. Now, ask yourself, from your business since you have started, have you made a profit of 25 million naira, of more than 25 million naira in a particular year? How many people are making 25 million naira as a profit, not as a revenue, as a profit in a particular year? That is to tell you that this law is somehow a pro low income earner, as the government have said. I am not a government campaigner, so I will stop it at that. That is all about that. Now, your compliance requirement, I've mentioned it, that you are required to file. You are required to register, which the government has already done it for you. Failure to file, failure to register attract penalty. If you fail to file when you are supposed to file as an individual, the penalty in the first month is 100,000 naira. Subsequent month, if you fail to file subsequent month, the penalty is 50,000 naira. So much more calculated for in here if you fail to file. So at this point, I don't know which one is better. Whether to, you will agree with me that to evade tax or to not comply with the law is not better in any way. If you look at it Islamically, it's not good to evade tax. If you look at it from the angle of law, it's not advisable. Even as a KPMG person, I will not advise you to evade tax or call the government bluff. Now, another kind of tax that may impact you as an individual is value-added tax. Value-added tax is just a tax you pay on supply of goods and services. If somebody is rendering service to you and they issue you an invoice, the person should include VAT on it. If you are buying goods or services, the person that is selling to you should include VAT on it. And I'm sure when you go to stores like ShopRite or Spar or any form of supermarket, you will see that when you get their receipt, they will itemize all the items you bought and they will include the tax on it. That's VAT for you. So if what you are buying is liable to VAT, then you have to pay VAT on it. Are we good? So it's on supply. If you decide not to spend, if you decide not to buy goods, if you decide not to ask somebody to come and fix your plumbing work, if you decide not to if you decide to keep your money to yourself and invest it, you are not going to pay VAT. So VAT is triggered by supply of goods and services to either by you or to you. Now, as a small business owner, you are exempt from charging VAT and you are exempt from paying VAT. Business, not an individual. I just want to make that clarification. As a business, if you have registered your business with CAC as a business name, or maybe you have a company that you are running, if that company is regarded as a small business, such company or that enterprise is not required to charge VAT or pay VAT. Let me put it that way. And what are small business? Small business means business that earn not more than 100 million per annum with a total fixed asset of 250 million. So tí ọjà yín tí ò bá ti pé, tí ò bá ti pé 100 million in a year, tẹ́ẹ̀dẹ̀ ní fixed asset of up to 250 million, it means that business you are doing is regarded to be, is known as a small business, and then you are not required to charge VAT. You are not required to file for VAT returns and the likes. However, if your business entails providing professional services, like you are a lawyer, you are an accountant, you are a tax consultant, you are a doctor, you are an engineer. In fact, to pay 2 naira, if you're making 2 naira as an income, you are required to charge VAT on it. You are required to file tax return. So what we are saying now is, if you are providing professional services means services that you render that requires technical expertise. That is, you have to get trained for it. You have to get certified for it, like an engineer, like a accountant, like a tax consultant, like a lawyer, like an attorney, and the likes like that, like a doctor. So if you are not, at any point, you are not regarded as a small business. In that case, you are required to charge VAT and file VAT returns. Now, there is another thing, especially for business owners, that you can claim input VAT. All the VAT that you are paying. let me take that again. Sorry. There is something we call output VAT, and there's something we call input VAT. Output VAT is what is VAT you receive from your customers. When you are selling your goods or when you are rendering service to your customers, the VAT you charge to your customers, you receive that. That is your output VAT. Your input VAT is when you are making purchases. You purchase from your vendors, or your vendor renders service, some kind of service to you. That's your input VAT. Now, what the law requires you to do is, your output VAT, you net off your input VAT from your output VAT. The balance is what you remit to the Nigerian Revenue Service. If you do not have input VAT, it means all the output VAT you collect from your customers, you are going to remit everything. It's not your money, it's government money. You collected that money on behalf of the government. So you are required to remit that to the federal government, Nigerian Revenue Service. However, if you have input VAT, whether on goods or services or fixed assets, you are required to net it off from it, and it is the balance you are going to pay to the government. And the timeline for you to do that is what? You have a timeline within 5 years. That's when you can do it. You can do it immediately. You can delay it, but it has to be done within 5 years. After 5 years, you cannot claim that input VAT anymore. Then there are certain goods that are exempt from VAT, or they are known as zero rated. Let me just put it that way. Zero rated or exempt. Number one is basic food items. Basic food items, if you go to the market and you buy rice, that's known as basic food items. You are not required to pay VAT on that. If you buy educational materials for your kids or for yourself, or educational books for your kids or for yourself, you are not required to pay VAT on that. If you buy medical product, like you go and buy drugs from pharmacy, you are not required to pay VAT on that. if you are maybe animal feed, you are probably you are operating a poultry, you purchase animal feed, you are not required to pay VAT on animal feed. Or maybe you are doing fishery. All the money you pay for that, you are not required to pay VAT on those ones. We have many more. Maybe before I share this slide, I'm going to include all of those items there. Okay. Then the law also ensure that it's possible that you pay VAT, you pay more VAT than you are supposed to pay. And let me sound it to you that what we have in law is that if the law has not subjected your income to tax, nobody anywhere can tell you to come and pay tax on such income. At the same time, if the law has not said you should pay tax on something, you are not required to pay tax. I mean, if the law has provided you some certain relief, you are not required to pay tax on it. Nobody will say, oh, because you are a citizen or because we have problems in Nigeria, and be diplomat. I mean, what's the word they normally use? Be a good citizen of the country. There's particular word, it escapes my mind. Be a good citizen of the country, or come and pay tax so that we can do more for Nigeria. No, it is what the law has told you to pay. That's what you are paying. So if you now overpay VAT, or if you overpay any tax, for that matter, you are eligible to a refund. You can apply for a refund if you are calculating your tax, or somebody told you, or somebody come to you and say, oh, I reviewed your document, you have overpaid your tax. You can request for a refund from government. Now, specifically to VAT, if you have overpaid VAT, you can request for a refund within 12 months. And the government, when you request for that refund, the tax authority asks 30 days to process that your refund. That's what we have in the law. If they fail to do that, you can use that refund to offset any tax liability you may have. Any tax liability. So we in Nigeria currently, we already, people in the tax space will tell you that government hardly refund your excess tax. But what the law has now done is, if the government fails to give you cash, you can use that money to pay for other taxes. So that is what the law has said. So I think that this will be the final slide for the purpose of our presentation. But before I allow for questions, I also want to mention that when are you required to file VAT? You are required to file your VAT, though as an individual. Of course, you are not required to file VAT. Because as a business owner, if your revenue is not if your revenue is not more than 100 million, you are exempt from filing VAT as an individual or as a business. As an individual, of course, individual, if you are not in business, it means probably you are in employment. That means you are not doing any form of business. So in that regard, you are not even required to file VAT. But as a business owner, if your income revenue for that matter is not more than 100 million, then you are not required to file VAT. Any other person is required to file VAT not later than 21st of every month. 21st of every month. It means the transaction that you did in January, you have up to 21st of February to file the VAT. Failure to do that, there's a penalty for that as a business owner. And who are you filing to? You are going to file to the Nigerian Revenue Service as a business or as a company. Thank you very much for your attention. And also want to apologize for people who may find it difficult to understand English. It's not so easy to switch between Yoruba and English. So I try as much as possible to make my language as simple as possible and remove some technical jargons along the way. Thank you. If there's any question, can let me know. Thank you.
All right, thank you very much. We want to, at this juncture, sincerely appreciate our speaker. We pray that the message is better understood and has been presented. We know it's a very technical session, but sincerely, you have actually simplified it in the simplest form. And I know that whichever side of the device we find ourselves, we really appreciate the presentation. So let me quickly pass this information. First of all, I would like to have the slide. We are enjoying to drop our email address or our WhatsApp number on the platform. So please, let's do that. And then secondly, let me sincerely appreciate everybody that have been patient enough to be on the platform, irrespective of the divides. For some of us that does not have a very good understanding of either of the language, either it is English or Yoruba language, and we're still patient enough to get the best from it. Thank you very much. We sincerely appreciate you. It is not because we're trying to bring everybody on board, because if you look at the topic of discourse, is what will benefit every one of us and remove some unwarranted fears that we could have, and that is what the lecturer has been able to do justice to, and would agree with me that lots of dust has been actually been cleared from the issue of tax and taxation from the beginning of January 2026. So at this juncture, we want to take questions and answer. I don't know if anybody has questions. I know that I'm expecting a lot of questions anyway. Just say it the way you can say it. It is English, it is Yoruba, or if it is the pidgin language too, you can actually say it. We'll actually accommodate you. Thank you very much.
Assalamualaikum. I have a question.
Walaikum salam. Go ahead, sir.
So please, sorry, Mr. Zachary, before you ask your question, let's see if you have a large number of people so that we can actually go through that. Okay, we have about 4 people having questions. So, Mr. Zachary, okay, you started already, so we'll take you as one. Okay, so Mr. Zachary, let's take you.
Thank you, Jazakumullah. Now, my question is, for example, as a salary earner, before we are paid our salary, the company has deducted the tax, but we carry out some expenses at work, which we are being reimbursed. At the end of the year or at the end of the month, this money will grow up. And after the tax has been deducted, this money will also add up to our income revenue, isn't it? Is government going to deduct tax from those money again? That's just my question. And secondly, for the medium business woman, like all this Yalata Ilepo, this issue, we will be trying to help them to understand how they can be saved from government revenue, from the tax, in order not to pay excess. But yet, some parties said that they should open 2 corporate accounts. But after finding this, it was discovered that if they open income account and expenses account, that at the end of the day, the 2 accounts is going to be matched and calculate their tax. And by so doing, they will pay more than what they are expected to do. Please, how can we help us on this?
So let me take that. I think let's take it one by one so that we don't mix the essential of the questions. So the first question is about employment income that you receive. So when you receive an employment income, before you receive it, I mentioned it that your employer would have deducted your payee. And on that, if your employer did well to calculate the tax correctly, you may not be liable to further tax. Now, what happens to the expenses you incur that your company reimbursed you? Of course, the law makes provision for that. You get the law makes provision for that. That if your employer gives you money, maybe additional money to do your activities for the company, and you didn't earn any profit from it, it will not be taxed. So essentially, your own is to, even if this amount is picked by the government, you should always have a document to back up your to substantiate your position. So your employer paid money to your account for reimbursement of expenses you have incurred. Before your employer will pay you, there will be some form of memo or payment voucher from your employer. So when it is time to, if they eventually picked that income, then you can tell them that this income is not an income, is a reimbursement of an expense I incurred on behalf of my employer, and that will be dropped. You get? So that is that. Now, for people in business, at this point, I will not advise whether to use corporate account or to use to continue to use your individual account. One thing you need to know that if you have not incorporated a company, if I say company, I mean company known as limited liability company or PLC. When you want to know company, the word limited will be at the end of the name, or PLC will be at the end of the name. If you are operating your business as a company, the company is different from the owner. It means the company will be taxed separately, the owner will be taxed separately. If you are operating your business as an enterprise, even though you have registered a business name with CAC, it does not matter. The business name and you as an individual will be known as one person. Even if you like, go and register a different account for that business, you are still the same thing. Adebayo and Co. is the same thing as Adebayo in the eyes of the law. So all the income that you make as a business or as an individual will be made together. However, if you are in business, do not forget that before you make that income, you will have incurred expenses. The law allows you to deduct all your expenses. In fact, it's possible that your expenses will be more than your income. That is, you are making losses. You can deduct everything, and it is what is left that you will tax. So there is no double taxation anywhere. From experience, there is no room for double taxation. At the end of the day, these market women that we are so worried about may end up not paying tax at the end of the day. How? Maybe because they made loss in a year, or the profit that they made after deducting all the expenses is not more than 800,000 in a year. And don't forget the tax rate that I showed to us. That is, the first 800,000 is what is taxed at 0%. So for me, except if we have some Iyalaje that are very big, except for those people, of course, those ones that are, to me, they are high net worth individuals. Probably they will pay tax, but it is what it is.
Okay, thank you very much. So
yeah,
sorry for those of us that I signify to ask questions. If our questions have been addressed, we may do well by pulling down our hands. So I will not be going back on some of those things. So let's take up Gofar, Abdulrazak Gofar. Can't hear you, Abdulrazak Gofar. I don't hear you. Abdulrazak Gofar, we cannot hear you.
Maybe he's muted.
No, he's not muted. We can't hear him. Okay, let's take Adeyemi Ibrahim Adikun. Let's take you.
Salam alaikum wa rahmatullah.
Wa alaikum salam.
Wa alaikum salam.
I want to Sincerely thank the organizer. It's a very impactful section. I work with Lagos State Internal Revenue Service. So I'm a little bit conversant with all what our lecturer has delivered. But he has done wonderfully well. So I pray Almighty Allah, Subhanahu wa Ta'ala, to continue to increase him in knowledge and make his delivery beneficial to all of us. Now, my question is this. With respect to section 34 of NTA, where you mentioned that disposal of shares more than 150 million or less than 150 million in value and whose gain does not exceed 10 million is not chargeable, is not liable to CGT. Now, there are two conditions attached here. Number one is that the sales value, the sales proceed must be less than 150 million. And number two is that the gain from that disposal must also be less than 10 million. Now, what happens if one of those conditions is met and the other one is not met? For instance, now, let's say the sales proceed is, let's say, 140 million, which is below the threshold, and the gain is more than 10 million. So will it still be subjected to capital gain tax, or is it that the two conditions must be met simultaneously? So that place is still that section is still confusing somehow. So I need clarification.
All right. Wa alaikum salam wa barakatuh. So in summary, if you meet one of the conditions and you do not meet the other condition, you do not qualify for the exemption. So like you mentioned, if the proceed is, let's say, 140 million in a year, but the gain is, let's say, 15 million. The 15 million is liable to tax. You get? Or let's say the proceed is 160 million, but the gain is 9 million, then it's still liable. It's two-factor authenticator. You have to meet the two conditions before you can qualify for that exemption. That is that. Then again, I have to make clarification that we will not have capital gains tax anymore. So whatever gains that you make will be added to your normal income, and it will be taxed using the graduated rate that I showed earlier. It will be taxed using income tax rate. So that's that. We do not, because capital gains tax, do not forget that the rate for capital gains tax is 10%. But it's not 10% we are going to use it. It's the rate, depending on where you fall in the income bracket. That's what we're going to use. Thank you. I hope that clarifies.
All right. I think it's clear. Thank you very much. So we'll take Bashiro Jimo Yusuf.
Assalamu alaikum warahmatullahi wabarakatuh.
Wa alaikum salam. Mr. Adeyemi, please, can put down your hands now?
Yes. So my question is on the VAT. So when you are rendering service, or you are selling something to someone, the issue of VAT, how do you include VAT in your charges? Does this have a range or a specific amount that's per whatever you are doing? So I'm not clear in that area. The secondly is he has answered the second question partially, and that is on, okay, you are starting a business. Yeah, now you need to have your account details. So that, and the business is something that you believe is going to be promising. You can be seeing something like 5 million, 2 million every month. So which eventually at the end of the year may be a huge amount of money. Now, which of the account details, is it the business account or your personal account that should be included, that the money can be coming into, or the business account itself, or whichever of the two?
Okay. Let me start from the VAT part. That how do you include VAT on your services? So you include VAT when you issue invoice. So maybe let me use an example. I don't know what you do, but okay, can you help me mute her?
It's cool.
Can you help me mute her? All right, thank you. So the thing is, let's say you are rendering professional service, for instance. Now, your customer that you render the service to, when you issue the customer an invoice, you put the money that you and the customer has agreed. You and the customer has agreed, maybe, let's say 2 million, for instance. 2 million. So that 2 million, you will state it as your contract value. Then you will now include VAT at 7.5% because the VAT rate is 7.5%. Multiply by that 2 million. That will be the VAT you are going to charge the person. So the total is what the person will pay to you as the vendor. The person will pay the 2 million to you. Now, but there are exemptions to this. So if in a year your revenue or your, let me call it income, is not up to 100 million, you are not required to charge VAT. How this will be determined is yet to be seen, but what we suspect that it will happen is that you may look at your revenue for prior year, or if your revenue for prior year is not up to 100 million, then when you are issuing your invoice, you are not required to charge VAT. You get that is for that. Then the second one for whether you should receive money through your business account or through your individual account. Like I mentioned, if you're operating an enterprise, a business name, without the word limited at the end of, at the back of it, you are the same. Your business and you is the same. There's no separation. It's the same. So if you like, you give your customer your individual, your personal account, money will come to it. Is a business income, then it will be taxed. If it's a business account, you also share with the person. Person will also send your money. It's the same thing. Essentially, what we are saying is, whether it's your business account or your personal account, the money, so far the money that is entering in relates to business, it will be taxed. Now, if I should advise you, which one should you use? For the purpose of having a clean record, anything that relates to your business should pass through the dedicated account for the business. This is just best practice. Anything that has to do with your business should pass through your business. It's just an advice. You don't have to take it. You can continue to use your individual accounts anywhere you want to be taxed. So that's it. But I also need to mention that they are not going to come and deduct your money or anywhere. That one should be clear. Thank you.
Okay, thank you very much.
Next question, please.
Yeah. Okay. My question is, hello, can you hear me?
Let's go ahead.
Yeah. When you were on one of your slides, you showed, I don't know, was it bond? If somebody invested in government funds and is expecting interest, that's for Muslims. We invest in Sukuk. So Sukuk, I've been listening to several tax seminars or read write-ups, but it appears there's no provision for Sukuk. So are returns on Sukuk going to be taxed? That's number one. Number two is they also talk about tax exemption on rent, house rent for those of us that rent house. If you pay less than 500,000, it's going to be tax exempt. So for our landlord, some of us, our employer has been asking us to suspend our house rent. So is that going to create a problem for our landlord?
Sorry, I didn't hear your last question, please.
I asked about Sukuk first, but the second question is about.
I get the Sukuk one.
Okay. The second one is about our house rent.
Okay.
So we were told where we worked that we should submit our house rent receipt.
Okay.
So that if perhaps we pay 400,000, we are going to be tax is not going to be paid on that. And if we pay more than 500,000, the excess is going to be taxed or something. So is that going to affect our landlord so that we are not going to have issue with our landlord? Because if I submit my receipt to our landlord, I heard that government will trace the address and ask landlord for earning on tax received.
Okay.
So I want to be sure of that, and how we should, if that's going to cause a problem for our landlord will say that, why are you reporting me to government? I'm just thinking about that scenario. So what should we do? And lastly, there has been like 2 days ago some rumors going on. I don't know whether it is rumor or it is real. Some people are saying that the tax provisions shared to the public is different from the one the president assented on. That there are some changes. There are some, I don't know. I want to clarify if that is true or false.
Okay. All right. I will try to answer the ones I can answer. Okay, so let's start from the Sukuk. So it is not correct that the law does not make provision for Sukuk. In fact, the law makes provision for non-interest finance. Non-interest finance, generally, including Sukuk. So whether it is Sukuk or not, so the law classifies non-interest finance under interest too. So whether you call it markup or whatever you call it, it is covered. So, and the same treatment applies to interest we apply to it. So take, for instance, if you're earning whatever return on investment that you are earning on Sukuk will be subject to tax. Basically, that is the summary. Okay. The second one is about rent relief. Now,
sir, my question is for bond. What I'm talking about is bond. For bond, they said
yes,
bond
is exempt. Yes,
government bond.
Yes, is Sukuk. You know that Sukuk is not. Is a bond issued by the federal government. Actually, it's part of the bond issued by federal government. So it's under that umbrella.
Okay.
So it is not. It's not bond issued by Saudi Arabia. Saudi Arabia or any other country cannot come and issue bond in the whatever. So it is Nigeria government that issued the Sukuk that you are subscribing to.
Yes.
You get, so that one is clear. Then the second one on rent. Now, about rent, it is not what you pay that will be used as a deduction for you. How will it be calculated? Is, let's say if you pay rent of, let's say, 500,000, for instance, 20% of that amount will be deducted from your income, from your salaries, from your 20%. Now, calculate 20% of 500,000. As what now? Is it 100,000? Yeah, it's 100,000 that will be deducted. At least you will not pay tax on that 100,000, not the entire 500,000. However, if you pay 2.5 million, for instance, as rent, not the 2.5 million that will be deducted, though. It is 20% of that 2.5 million or 500,000, whichever one is lower. So 2.5 million, what's 20% of 2.5 million? I think that's 500,000 already, Abby? 500,000. And the maximum you can claim is 500,000. So you still claim your 500,000, not the entire. Now, before you can claim this rent relief, we call it rent relief, there's a requirement to submit your rent agreement or your rent receipt. There's no two way to it. If you don't submit it, you cannot claim it. And that is to your own expense. Now, if you are considering your landlord, if you are looking at will your landlord not be taxed and all that, either way, whether you like it or not, your landlord should be taxed. And if your purpose of not giving the document is because you want to conceal the income of your landlord, then you are aiding and abetting tax evasion, which is not allowed under the law. So do not think because of your landlord. No, is because the law has required you to submit documents for your own benefit. Look out for yourself. Let your landlord sort himself out. That is what I will say. Then about whether the allegations in the media, so whether it's correct or not. See, I was not there when they were passing this law. But what we know is that we have several versions of this law out there. In fact, the one that has been the gazette that we have like 2 gazettes. And if I say gazette, it means the laws after being signed that has been registered in our record. Gazette, we call it gazette. So we can't have, it has never, I've not experienced that we have 2 gazettes of the same law. And the provisions in these 2 versions, they are slightly different. So we have the first one after the government, after the bill was signed by the president, we have one version. Then later we just add another version that they wrote an official release on it. So, and the provisions are slightly different. So I was not there when they were passing it, and I cannot say for sure that, oh, these provisions are different from what the president signed. But what I can tell you, or what may lend credence to that, is because of these 2 versions that we have. So that's what I can say about that. Thank you.
Sorry, can you hear me now?
Okay,
yeah,
I was like Gofar. Yes.
Okay, yeah, thank you. Thank you for, I want to appreciate the organizer and the facilitator who has been trying to simplify things for us. So for me, I just have some couples of questions that I think I would like a clarification about because of some of the information that I also get from the people that was my understanding about the nature of my job. So I know that our facilitator, Mr. Mukail, has assisted us to talk about as in when do we need to file VAT, when do we need to charge VAT. But I don't know because to the best of my understanding in the current law that we are still using regarding the VAT. So the VAT Act actually provides that every business at the commencement of the operations must register with VAT, which means registration of VAT and then charging of VAT. I want to believe that is a 2 different obligation entirely. So I want to ask that for a business that is not even making up to 25 million naira currently, even maybe based on the assessment that based on my business in the next 2, 3, 5 years, I don't think I can even make up to 100 million naira. For business name and those who also register as a private limited liability company, are they also required to register for VAT before we can now say that, okay, after you are registering, just because you are not making up 25 million naira, you don't need to charge? So I want to clarify, is the law still requires them, regardless whether they make up 25, they make up 100 million naira in the new entity, to register for VAT before they can now say that they are not going to be charging? That is number one. Then the second question I will also ask is that I know that now some messages have been flying around the social media whereby some people, some so-called professionals, are now advising those who are having business name that they go and convert to LLC, limited liability company, without even considering some other obligations that they need to do maybe by filing returns with the audited account. So based on your own understanding, our facilitator, is it also advisable to advise is it even the best? Is it in the best interest to advise those who are registered with the business name that are doing their small business to go and register, to go and upgrade their business to limited liability company, just because the law has made a provision that they will be exempted from payment of tax, provided their gross revenue is not up to 100 million naira. And the last question that I will be asking here is that, assuming that I'm in a paid employment, and I also have a form of side hustle that I'm doing. So in my paid employment, payee is usually being deducted. So maybe if at the end of the year I now also bring in the side hustle, and at the end of the day, the profit, I did not make any profit. Maybe I even made a huge loss from the side hustle. Can I also use the tax that has been deducted from my paid employment? Can it be used just to say that, oh, because as after we added all your revenue together and after considering your loss, maybe your tax is not supposed to be up to what has been deducted from the paid employment. Is it possible for me to now use that one to request for refund from my paid employment as a result of the loss that I have made? Maybe it's even my paid employment that's even funding the side hustle that I'm doing. That's my question. Thank you, sir.
Okay, sir. Can we take Mr. Said Omotunde?
Sorry, the question he asks are many. I mean, let me quickly answer that. It won't take a long time. Okay. So for the first one, you talk about registration for tax purpose, I mean for VAT under the current Value-Added Tax Act. Of course, the threshold under the Value-Added Tax Act is 25 million. And if a business, of course, upon commencement, you are required to register for tax purpose. However, the penalty for non-registration, the law exempts a small business, I mean a company that has not earned up to 25 million in a year under the current act from paying that VAT. So that is clear. Even if you have not registered, you will not pay penalty. But here under the NTA does not even give room for you to wait, because it's not only VAT that you are registering for. You are registering for all the taxes. So whether you are liable to pay VAT or not, you are required to register for VAT. You get, and I mentioned that the government has already done this registration for you, and it's one single registration that you will need. You don't need to do separate registration for income tax and separate registration for, in as much as you have your tax ID, which will be coordinated by Joint Revenue Board. You are good. You get. Now the question about whether to advise people to incorporate a limited liability company or to continue running their business as business name. See, that advice is on case-by-case basis. You cannot just make a general advice. It's not done anywhere. So you have to look at individual cases separately to determine whether, it is business name that is better for them, or it is what? It is limited liability company that is better for them. So you cannot generalize advice. That's what, if opinion were to be generalized, it means lawyers, accountants, tax consultants will be out of business. So you need to look at individual on a case-by-case basis. I want to remember the third one. Apologies.
The third one is that if I have a side hustle, and I'm also...
Okay, yeah, I remember now. Okay. Thank you. So if you have a side hustle and you also have employment income, of course, your employer would have deducted payee from your employment income. Now, from your side hustle, now realize that, you made loss from that your side hustle. You cannot, what you have made from your side hustle is a loss. It's not an excess tax. So that loss, you can carry it forward. You cannot say, that loss, what you will get is accessible loss. That accessible loss, you can carry it forward and use it the following years to reduce your taxable profit. That is all you can do when it comes to the business profit. And this also applies to people who are only earning business income. You get. So, is that clear?
Yes. Thank you so much.
You're welcome.
So, Mr. Omotunde, let's have you.
Hello?
Yes, I have the floor.
Yes. Sorry. I want to ask, where does the states and the local governments, where do they stand in this? The states, they have the way of collecting their own taxes too. The local governments, those of us who have businesses, they will usually come to us. Okay, you have to pay TV, you have to pay whatever. Usual thing they talk about fumigation of your premises and all of those things. Where do those ones stand presently in the new dispensation?
Thank you for that wonderful question. It's an outside the box question. Yeah, so for local government, okay, let me start from state. For state, when it comes to taxation of individuals, it is state that will collect the money. I mean, the state where you are resident, where you are living, that's where you will pay. For people in Lagos State, they will pay it to LRS. For people in Kaduna State, they will pay it to Kaduna Internal Revenue Service. For people in Kano, they will pay it to Kano State Internal Revenue Service, Abuja FCTRS, like that. That's personal income tax. Now, and this personal income tax is part of the tax included in the NTA. It was enacted by the National Assembly, and no state can vary that. The same rate for everybody in Nigeria. So it's not about where you are living that will determine your tax. That's one. Now, there are other taxes that the state can also impose. We have a lot of them. We have business development. We have business premises and whatnot. Now, let me break it to you that the initial thought for the committee was to consolidate all these tax laws, all the numerous tax laws that we have, both the local government and the state laws and whatnot. But what they have been able to achieve so far is to only consolidate the federal enacted laws. I mean, laws enacted by the National Assembly. Nothing has actually been done when it comes to state law and local government law. So even with the NTA from next year, we'll still have these state laws still in existence until when they are able to see the value of this Nigerian tax reform. Because don't forget that many states in Nigeria, I think apart from Lagos, Port Harcourt, Rivers State, Abuja, probably Kano, and few other states, probably Ogun. Many of these states rely on federal allocation. The taxes they are even collecting is very, very low. So they are collecting low tax, and you still want to take away these taxes. So they want to first of all see the benefit of this. They want to wait and see the benefit of this tax reform before they now let go of their own laws. But what you still have is you have these state taxes and this tax reform act working side by side on separate things. So unfortunately, the local government may still come to you. But what you need to do, maybe what you need to do differently, is that whenever anybody comes to you, you ask for the document that is imposing tax on you, because that's what I do too, especially for my clients. If any local government or any state government comes to them and give them an assessment for taxes, whether a levy or anything, the first thing I will ask them is, show me the state assembly law that imposes this tax on me. Because you see certain touts, hooligans, they will just come to your shop. They will say, oh, you have to pay this, and they bring one stupid ticket. Don't fret, just calm down. Ask them, what law are they trying to impose and all that. If there's no law, you are not required to pay anything. Of course, we know that there are Nigeria factors there, but if you have that, if they see that you are not an easy target, they leave you, they let you be. You only pay the taxes that you are liable to pay. Thank you.
So we want to yield the floor to the number one leadership of this house. He has a question as well. We want to just give him the privilege of asking his question now, and it's no other person than Sheikh Abdulwahid Obalakun. I think I saw it. Yeah. Over to you, sir.
Assalamu alaikum warahmatullahi wabarakatuh.
Wa alaikum salam.
I want to say a big thank you to our facilitator. May Allah subhanahu wa ta'ala bless his endeavors.
Amen.
My question is on the VAT. If I charge VAT on my services or whatever, and at the end of the year, it is discovered that I am exempted because I didn't meet the threshold, 100 million income and the rest. I didn't meet it. What am I going to do with the VAT that I've collected?
Okay, so if you have collected VAT that you are not supposed to collect, as a matter of fact, okay, let me start it like this. The way we do tax compliance is usually based on historical data. You're most likely going to know maybe the beginning of the year, probably based on your previous results, financial results, that you are a small company, your income is not up to 100 million. But assuming that you do not know that your income is cannot be more than 100 million, every time you collect VAT, so VAT is not collected annually. VAT is collected as you engage in transactions. So, but you are going to pay it on a monthly basis to the government. So let's say in January, you didn't even know that you are not going to meet the threshold, but you collected VAT up to, let's say, 500,000. That VAT you collected in January, you must remit it. I mean, pay it over to the federal government before 21st of February. Then the one you collected in February, you have to remit it before 21st of March. So you are not even waiting till end of the month before end of the year rather, before you remit. So you must remit what you have collected, whether you are required to collect, because there is also a provision in the law that says that you can even opt to be doing your business normally. You don't want to be exempt. You want to be a good citizen of Nigeria. You want to be collecting VAT on behalf of the government. You can opt to do that. Sure, you get. But whatever you collect, it is a crime not to remit it, because it will show on your invoice that you are charging VAT. So the question is, what happens to the VAT you have charged? You have collected it. You cannot eat it. It's not your money. You have to remit it, whether you were correct about your business income or not. I hope that clarifies, sir.
Thank you very much.
You're welcome, sir.
Okay, so we'll take Adebola iPhone. Adebola's iPhone, please. Okay.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam.
I have two questions. The first one, thanks for this laudable programs. I really appreciate the organizer. May Allah reward you all for enlightenment. The first question is, if you collect taxes from your employee, so are the employees going to file tax again?
Okay.
That's number one question. Number two, for a non-profit organizations, NGO, do they have to file taxes?
Okay. All right. Thank you.
These are my two questions. Thank you.
All right. Thank you. So for the employee that the employer has deducted tax from, and the employer has also filed tax return, should the employee still file a tax return? Yes, the employee is required to file a tax return. So the employer will do their own 31st of January, not later than 31st of January. So for the income, for the salaries and paid to staff for 2025, the employer has up to 31st of January of 2026 to file the returns. Now, for the employee, yes, an employee is also required to file their own returns, not later than 31st of March of every year. So these are two different obligations, and there's penalty for not doing both. The second one for charitable organization, I guess. So the law exempts charitable organization from paying tax. Charitable organization, educational institution, which other one? Religious body of public character from paying tax. So before you can say you are a charitable organization or you're an educational institution, you must demonstrate that you're of public character. How do you do that? First, you must be registered under a law in Nigeria, and you must not distribute your profit in any form to your promoters. You must not distribute your income in any form to your promoters. So those are the conditions for exempting charitable organizations or religious body from tax. Now, let me just use this medium to also answer one person's question. Ismail Adebayo asked a question that it would be nice to learn about tax on donations because religious organizations do receive donations. Yes, so fortunately for us, the law includes religious body as organizations you can make donations to. So if a company donates to a religious body or educational institution and the like, the company that donated can claim deduction. I mean, can use that donation to reduce their profit. I mean, before it is being taxed. That's the company that donated. Now, the religious body that received the donation to, I have mentioned that the income is not liable to tax if you are able to demonstrate that you have public character. And as far as the income, the donation, I mean, the income is coming not from business purpose. It's coming, I mean, for the purpose on which the organization was set up. Thank you.
All right. Thank you. And
Okay, so
again,
we'll take. Do you still have anything to clarify, Mr. Adebola?
Thank you. Excuse me?
Do you still have anything to clarify? I think we are fine.
Yes, I just want to ask that for NGO that already filed for tax for all, are they liable for late filing if they were not aware of it, but they submitted their auditing, filed their taxes, but they are now, are they liable for late filing? And if it is so, like how much do you think they should be liable for?
So depending, so for under the current law that we have, the penalty for not filing your tax return is for income tax is 25,000 in the first month and 5,000 subsequently. So I don't know the year end of that organization. If the year end of that organization is December 31st, so the organization should have filed its returns by 30th of June. So if the organization fails to file its returns 30th of June, 1st of July, the organization has a penalty of 25,000. Then if the organization fails to file it in end of July, let's say August, yeah, let me use August, yes, August, then another 5,000, like that. That's what you calculate up to this when the tax return is filed. Now, if the failure continues into the next year, then the penalty will switch. Instead of 5 million, it will now switch to 50 million for that organization, like that going forward.
All right, I appreciate, but is there any way I can have your contact after the services for other persons? Because there are a lot of people now raise their hands and I don't want to delay them. I want them so that everybody have the opportunity to ask a question. So is there any way through my phone, if I can get any contacts after this, this session?
Drop your number, go to be contacted and send just add a message to it. The guys will get in touch with you.
Okay. All right. Thank you so much. I really appreciate it. Have a blessed day.
You're welcome. Thank you.
So, Dr. Isiaka Taiwo Dada. Doctor. Okay, can we have Arafat?
No. Assalamu alaikum warahmatullahi wabarakatuh. Good morning, everyone, and thanks for the opportunity. So I want to ask a question. We are actually an e-commerce platform, like we connect sellers and buyers of made in Nigerian products to showcase their product, and people that want to buy they want to buy. So my main question is, such a platform, like what we do, is it considered a small business? Because basically how income comes into like the businesses, maybe we get grants, and also the vendors on our platform, they are paying like monthly subscription to showcase their product and all the like. So what I want to ask is it considered a small business, and how is tax calculated for such a platform, as we are a startup? Then the second question is, we are registered with the Corporate Affairs Commission, CAC, and I think normally they do annual return, or what is it? I don't know. So are we going to be filing annual returns and at the same time paying tax, or annual return will not be paid again to CAC, or is it only what's it called? Is it only tax that we are going to be paying? And the third one is on one of the slides that was presented earlier, I think on the 15th slide, there is a particular term there that I don't understand, NHF. So if you can help me with the like a little explanation about it. Thank you.
Okay, let me ask my question. Sorry. I want to ask, as regards like a civil servant that also have a company, an enterprise. So educational based enterprise. So how is that person to be paying tax, knowing fully well that yes, his income tax has been deducted by the government? Two, now an aspect of that enterprise is also having a fund, like an endowment fund account. Endowment fund account, money, some money is there. How is it taxable and the like? Thank you.
Okay, so let me start from Sister Harfa. So when it comes to determining whether a business is small or not, it's not about the size of the compound. It's not about the size, the number of staff that you have. It's about the revenue that you make in a year. So if you are a company, limited liability company, for the purpose of your income tax, currently in the law, the threshold is 50 million. You get that? For purpose of income tax, the profit earned by the company. However, if for the purpose of VAT, it is 100 million. For determining income tax, I repeat, for determining whether you're a small company for income tax purpose, your tax on your profit, it is 50 million. Why for VAT, whether you are to register for VAT, whether you are to file VAT, you are to include VAT, it is 100 million, two conditions like that. So that's about it. So if in any year, the subscription that you receive from these people using the platform, the commissions and everything, if you accumulate everything and you calculate it and it's not up to 50 million in a year, it means you are exempt from tax, income tax, that is tax on your profit. And if the income is also not up to 100 million, then you are not even required to charge VAT. Now, for CAC and tax filing or tax payment, there are two different obligations. CAC is for corporate, is a corporate regulation, corporate laws, and they normally call companies and allied matter as the mother of all companies' laws. So it is a different thing entirely. It has nothing to do with tax. So you are filing your annual returns with CAC. Continue to file that. For tax return, it's something that, of course, you are required to do even as as a startup. You are required to file your returns. Then if you exceed the threshold, then you are fine. I mean, you are also going to pay the tax. The next one is on somebody who is in employment and has a different another business, educational business. So the thing is, this business, generally educational institution, the income of an educational institution is exempt from tax if it meets the conditions I mentioned earlier. That is, if you are of public character, that is, you are a registered educational institution and you do not, that educational institution do not distribute income to its promoters. Take, for instance, you are the owner, but for that educational institution, you do not take a form of dividend, or you can take salary from it. That is salary for being there, but you cannot take any form of distribution, like maybe the company is paying dividend to you, or the company bought a car for you, because what the law is saying is distribution in any form. So that is that. If you do not meet that condition, then you are going to pay tax on the income of that educational institution. You get. Now, the endowment fund that you have, the endowment fund is not, except if that endowment fund is generating probably interest or another income for you. The income that the endowment fund is generating, yes, is going to be liable to tax. But if that endowment fund is not generating any income for you, you cannot tax it. It's more or less like a savings or investment for you. I think I've answered that. Thank you.
All right, so we'll take the last person. That's Lawal SI. Let's take your question and we'll draw the curtain at this juncture.
Yeah, thank you very much for giving me the opportunity to ask my own question. Assalamu alaikum warahmatullahi wabarakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh.
Yeah, my questions is in 3 or 4 folds. One, for money merchants, this OPay merchant that fill up the street now, if their income meets up with this threshold, are they going to be charged, or are they also qualified to remit their tax? Then that is one. Then secondly, for those people that are doing monthly contribution, this Ajo Adako or things, that whereby some people will transfer the money to this person account for the month, and you pay the number, okay, you are the number 1, number 2, like that. And at the end of the month, or at the end of the year, they find out that this income or the money received by this agent meets up with this threshold. Is the person going to be charged? Or if the person has enough evidence to show through for a narration that this money are just monthly thrift. So that is number 2. Then number 3, for those for we that have been doing this thing for a while, and we've been charging VAT, and now isn't by next year that we are going to be tracked, or for the money that we've received at the past, we are to go to the government and remit it? That is number 3. Number 4 is that okay, someone, maybe I want to sell a plot of land, and then someone now came that, okay, this amount you are selling your land is 500,000. Please add 200,000 to it as a middleman. And at the end of the day, my own money is 500. I've gave out the 200,000 to the middleman. So at the end of the year, maybe that has been the way I've been operating throughout the year, and I met up with that threshold to be taxable. If I'm able to prove to the government or to the tax collector that this money, this is the narration of everything, what would be my What will be the outcome of this thing? Then lastly is that okay, take for instance now, I was told, I don't know how true is it, that if okay, I'm an employer under someone now, and my money has been taxed, the money I receive in my account has been taxed. I now use that money, my salary now, to maybe I use it in purchasing or in paying someone. The person told me that since the money that I received or the money I'm about to spend has already been taxed, that where that money is going to will not be taxed again. How true is this statement? Those are my questions, sir. Thank you very much.
Thank you. I think let me start from the last question. So if your money, you receive money that's already been taxed and you now use it to pay for services, am I correct?
Yes.
Okay. So yes, it's not correct. That's not correct. So if you receive money, and of course the money has already been taxed, and you now pay, somebody now render a service to you, and you pay the person. The person is earning an income from you. The person will pay tax on that income because the person is earning an income from business or a service the person renders to you. It's different when you send the money to your family. They have not done anything to you, but maybe for an upkeep. Take for instance, you can imagine when you send money to your child in the university for an upkeep, your child will not pay tax on that income because the money has already been taxed in your hand. But if your child is rendering a service to you, and you pay the child for a service, of course, the child should pay applicable tax on it if the child meets all these thresholds that we talk about. Then let me talk about the money merchant that we have. So for the money merchant, they are also required to file tax returns and pay if they meet, everybody is required to file tax return, whether they meet the threshold or not, as a business. You get, but whether they will pay tax now depends on whether they are regarded as a small business or they are not a small business. So, but what is their income? That's the question you should ask. What's the income of this money merchant? Is not, if I go to a POS merchant now, if I ask the POS merchant that I want to collect, let me say I want to transfer certain money, or let me say I want to collect 5,000 naira. The OPay merchant will tell me that for every 5,000 naira, I'm going to pay 100 naira, right? So the OPay merchant will give me 5,000 naira, and I will transfer 5,000 naira from my account to the OPay, 5,100 to the merchant. You get it? So the 5,000 is not his income. You get, it is the 100 naira that is the income. So if you now accumulate all these 100 naira, 200 naira together, and it's above the threshold that I mentioned for VAT, for instance, for VAT, then it means that for all these services that this person is rendering, this person will be required to charge VAT, but it is not practicable to do that. So these people may not be able to charge VAT because it's not something that is practicable. Then when it comes to income tax, of course, they will pay income tax on the money they have generated, not the 5,001, but the 100 naira to 200 naira, they will pay income tax on it. Then for Ajo, yes, Ajo is not your money. All you just need to do is to ensure that you keep proper record, that this money does not belong to you. The money you have in your account, they belong to some people, and always let the people, when they are sending the money to you, let them do a proper description so that they don't put you in a situation whereby you have to be explaining, and you get what they say. You explain and you explain tired, no evidence. So let the people who are sending money to you for Ajo to describe it as probably Ajo for January, Ajo for secondary, as for February, like that. And you too, that you are collecting the Ajo, I'm sure probably you have a card that you are giving to them, or there's something that where you put a register, always have that record, set it up so that you don't have to explain. Let your record be clean in such a way that if a third party who do not have an idea of what you are doing will understand it upon looking at your books. Then for, I think VAT, I think you asked the question about VAT, that if you have been collecting VAT and you have not been paying, will you be required to pay the VAT, or you have to start afresh from next year? First, if you have been collecting VAT, it's a crime not to remit it. So you have to first of all go and remit it. And it is also possible that they may come for you. The tax authority have the right to do investigation as far back as God knows when. So if they find out that you have been collecting VAT and you have not been remitting, yeah, you may be penalized, and the penalty is actually very high. Penalty is 10% of the amount you fail to remit plus interest and at MPR rate. You know, we don't like paying it. I mean, interest is not around, and if the government now force you to pay interest because of your failure to remit VAT, so the best thing for you is to go and declare voluntarily the VAT you have collected on behalf of the government. Declare it and pay it and let your book be clean. Then going forward, you start your VAT journey. I don't know if I've answered all the questions. Please confirm.
Yeah, thank you very much. You've answered all the questions. I appreciate it.
All right, thank you.
All right, so thank you very much. So we have there's a question you answered a few minutes ago. The intermediary e-commerce. So at the point you are responding to the question, the person was logged out. So please, let's quickly let's just help us respond a bit to our question. She wants to get the feedback. Somebody asked a question of when I'm paying my tax for my employees, and I just pay it as lump sum. What is the consequence and what is the benefit for me, for my staff, and my organization? I think those two things, just to address it before we draw the curtain.
Let me answer the questions for the intermediary. Now, I responded by saying that for you to determine whether you're a small business or you're a large company is not a matter of the size of your business premises. Is not whether you have, maybe your business is located in a skyscraper or you have 100 staff. It's a matter of your revenue in a year. So if as a company for your income tax purpose, income tax, I mean tax on your profit, as a company, the threshold is 50 million. So if your total turnover in a year, revenue, I mean, if I say turnover, I mean revenue in a year is less than 50 million, then you are regarded as a small company, then you are not required to pay tax on your profit. But for VAT purpose, the threshold is higher, it's 100 million. So if you have not earned up to 100 million as revenue in a year and your fixed asset is not up to 250 million, then you are also not required to charge VAT. Anything other than that, then these things will apply. Then when it comes to CAC filing annual returns and tax return, these are two different obligations. You still continue to do your CAC returns and you also do your tax returns. They are two. In fact, NRS is different from CAC. So, and they do not, I mean, their level of interactions does not include the harmonization of returns. So I think I've answered our two questions. Then this other one,
I paid the tax of our employee lump sum.
Lump sum, yeah. Okay.
So what's the benefit to staff?
Of course, you are paid in lump sum. Let me think I get the lump sum. So maybe every month when you deduct the salary, you pay it to them. I mean, you deduct the salary. I mean, you deduct the tax and you pay it to the tax authority monthly. Is that it?
I want to believe that's what his person meant, and without saying that this is what Mr. A is paying, because the person said.
So if you are doing that, it is fine. What you just need to do is, I mean, before you can even pay any tax, you can even pay for payee, you must prepare a schedule. Now you submit the schedule and to the tax authority, and from the schedule they will see the staff you are paying for and the money that you want to pay. So it's fine if you are paying lump sum, you get.
So I said, what is the benefit in it for the benefits in the new tax law, or for the staff and the business?
There is nothing
I think
has
you have talked about it in the
Yes,
slides. I think that takes care of it.
Yes, nothing has changed with regards to that. You still continue to pay it like that. You still continue to do it like that. Nothing has changed. Your employee, it means for your employees, they are paid the tax on the employment income. And if the employer fail to calculate the tax correctly, then the employer will pay the balance. Because the obligation is the employer to deduct the right amount of tax, not on the employee. So nobody will come for the employee for the incorrect tax deducted by the employer. It is the employer that will be liable for the shortfall. So that's it. Nothing has changed with regards to that. Thank you.
All right, sir. Thank you very much, sir. We are moving to the close of the program, and we want to sincerely appreciate the organizers once again. And as much as we appreciate
Hello, Assalamu alaikum.
Wa alaikum salam.
I left 2 questions in the chat box. They were not addressed. I raised my hand. I was not called.
Okay, don't worry. I'll check the chat box again. You didn't raise your hand. Just raise your hand now. So am I worried? I'll check the chat box. So would want to sincerely appreciate the lecturer for the presentation. You know, it's been a long day. So I'm out. So I want to see if I can still get your question.
Since she's
okay,
there, let's
business on COVID. Okay.
Good morning, sir.
Just take it a minute, please. No introduction. Just straight to the question.
All right, thank you. There are 2 questions. I said, how would these monies be taken? How would these monies be taken? How? The taxes, if we're not going to pay by ourselves, for companies will pay for themselves, for their staff and stuff. It means that the monies in our accounts is safe if, by description, those monies did not come in as income. Then secondly, I asked that during COVID period, a lot of people registered. I registered companies, but post-COVID, we no longer run the company. No bank account was open for them to make ends meet at that time, trying to do some businesses, although small scale, much more smaller than what the government will even say is a small business. So what will happen to those businesses that are registered with CAC that are no longer working, that we no longer use?
Again.
Yes, we no longer use them. Thank you.
All right. It's taking.
Yeah, please, I have a question to ask. Good morning, moderator.
No, we can't keep taking. You can't just come now and ask. Because our question is in chat box. Sorry, we are very, very sorry. We are pressed for time. Thank you very much. Mr. Mustafa, please, let's attend to our question.
Okay. So for the last question about the business, the established pre-COVID and the discontinued post-COVID, what will happen? Nothing will happen to those ones because we are not doing business anymore. No business income, nothing to tax. So you are good to go. In as long as you're not doing business with that again, you are not generating income. If you start generating income on the business, the applicable you have to pay the applicable taxes. Then you ask, how will the money be taken? First, nobody is taking your money. There are procedures for assessment. First, the law gives you the first compliance obligation, that you file self-assessment. We call it self-assessment. That is, you go to the tax authority and you declare yourself. That's self-assessment. Now, if you fail to do that, then they can do an audit, they can do an investigation, and they can even go as far as possible to do what we call best of judgment, presumptive tax, if that is what they feel like doing. Now, if they issue you any assessment, you have 30 days to respond to that assessment. You can tell them, oh, you are not owing them any money, with document though. You can't just talk with word of mouth. Tax has nothing to do with sentiment. It is document that you have. It is fact-based. So you can go to them and say, oh, you don't have the income they are trying to tax is not income. You give them the relevant document, and you have several expenses. If you are in business, then you calculate your tax. You tell them within 30 days. Then after you have submitted that, they can come to you within 90 days. They have up to 90 days to come to you and tell you that they accept your position or they do not accept your position. If they do not accept your position and you feel like this money is a lot, you can take them to court. There is a TAT, we call them tax appeal tribunal, and you must approach those ones within 30 days. You must file your whatever, and these are the work of lawyers. I will not, and you can take them to court up to Supreme Court. So there are mechanisms for tax dispute and resolution under the law, but nobody will come to you and say, deduct your money. But if you fail to object at any point to their assessment within 30 days, that means the assessment they have raised on you is final and conclusive. You are saying that you have agreed that you are owing the government. You get. Now, how will the government take the money is yet to be known. Probably they are going to place a lien on your account. That is, they are going to they will not allow you to deduct money from the account. The money can be coming to your account, but they will most likely not take the money, but they will place a lien. That is, you cannot withdraw money from that account. And if you cannot withdraw money from your account, that means your business will be crippled. That means you'll be forced to go and meet them and then agree with them on how much or how you're going to pay your tax. That's that. Thank you. For Adewale Omolubo, I think you have my contact. You can reach out to me for a question. Thank you.
Sorry, thank you very much. I honestly appreciate everybody. I understand. I want to appeal to us that we can't take everybody, and we can reach out to the speaker or the moderator, or the organizers, as the case may be, to get further information regarding whatever we need to get. Time is fast pressed, and we need to do some other things. So at this juncture, I want to invite the chairman that organized this program to give us a vote of thanks and pass a few other information. So I will call on our brother, Mr. Abdul Hakim Kolawole Odeduto, ACA. You are welcome, sir.
Alhamdulillah, thank you very much, Mr. Moderator. On behalf of the organizers of this program, I sincerely thank you for taking the time to attend this session on the new tax law. Your participation, insightful questions, and thoughtful contributions greatly enrich this discussion. I'm also grateful to our facilitator for sharing his his clarity and expertise in
Hello, I can't hear him again. Can you hear him?
Actually, I can hear from my own end as well.
I think it's network problem. Just give him a few minutes. In 30 seconds, if he's not back, would move to the next thing on the agenda.
Our time is close. Àwa sọ pé a fẹ́ wá ṣe business, a sọ pé a fẹ́ wá ṣe business, tá a bá dá business sílẹ̀, tá a bá gbà yàn sí ẹnìyẹn ló máa jẹ.
Okay, I think we are unable to get Mr. Deadton back online. So at this juncture, we'll draw the curtain. So let me sincerely appreciate each and every one of us, everybody that been part of the platform, without leaving anybody behind or excluding anybody. I want to sincerely appreciate every one of us, most especially the leadership, and more importantly, our guest speaker who assists us this time, was here ahead of most of us and is still here with us. We pray that God Almighty continue to enrich him in knowledge, wisdom, to continue to dispense and serve humanity much more. And for the organizers, thank you very much. And at this juncture, I want to call on Mr. Abdulkarim Adenekon, ACA, to give us the closing prayer.
Okay, Alhamdulillah Rabbil Alameen. Alhamdulillah Rabbil Alameen. Alhamdulillah Rabbil Alameen. The first of my prayer is Allah should enrich us to the extent that we are going to have up to the threshold that government is requiring for. You know, what matters most is to pay tax should not be a problem if you have more money than what they are talking about. So you pray to enrich us more and more and more. And for us to be able to pay tax to the government, likewise to be able to pay our zakat to Allah as well. So it's a matter of we should not fear of you should not fear of poverty. We should pray that Allah should enrich us. We should be able to aim to have money like Dangote and the likes. So Rabbana hatina fid dunya hasanatan wa fil akhirati hasanatan wa qina adhaban Rabbana la tu'akhidhna in nasina aw akhtana Rabbana wa la tahmil alayna isran kama amarta wala ladina min qablina Rabbana wa la tahmilna ma la taqata lana bi واعف عنا واغفر لنا وارحمنا أنت مولانا فانظرنا على القوم الكافرين والعصر بسم الله الرحمن الرحيم والعصر إن الإنسان لفي خسر إلا الذين آمنوا وعملوا
الصالحات وتواصوا بالحق وتواصوا بالصبر سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك سبحان ربك رب العزة عما يصفون والسلام على المرسلين الحمد لله رب العالمين. Thank you very much.